So let's go ahead. The dollar yen to start with. What can we see? Well, this rash fall, okay, we all saw it, and I was already mentioning shorting up here. Well done if you followed me in that. The reason why I did that is because if I go on here, another person from Belgium, great to see you. If you've got any questions, just ask. There's a lot of Belgian people. I can say Rita is the first Belgian in my academy as a paid member, but maybe we'll have more. So you had this pop up here. If you go on my profile and you search US dollar yen, or you go on my YouTube, things like that, I called it short up here. A lot of people ridiculed me and said there's no way, it's just going to keep going up, and it fell dramatically. Now, why did it fall from here? Okay, well, it was two things. Number one, and perhaps in this order. Number one, you had a change in traders' bias and market sentiment. In other words, people stopped saying, you know what, I want it to go higher. And they said, okay, well, perhaps I would rather liquidate my longs and flip short. Okay, what that does is it causes this big fall down here. Okay, and you know, you could have exited and reshorted and whatever on the way down. Many of you did. Okay, and that would have led you into gains. Now, if I just take a fib, and we just take from the low to where it fell, it was about a 50% retracement, which is reasonable given the monetary policy stance within Japan, which we're going to get onto in a second. But once you'd retraced, okay, you fell in line with minor historical support, presumably if you look all the way back, okay, you can see that. And what's really interesting here as well is if I just zoom in and get rid of what was there on the left, you can see the market stops here, and you can see it stops there, okay? Now, the reason why I said presumably there's historical price action is because I knew this has to stop for a reason. And if I zoom out, you can see it comes right in line with this. So, you know, it doesn't just randomly stop there. The reason why I knew that is because it was likely if it stopped here, it stopped somewhere else. And that's what trading is all about. That's what getting probability is about with any entry, okay? So that is why when it comes to here, you look long again, because you're using historical price action, or you're using any means you can get to make a probable long-term decision. So you had your rebound from there. 50% retracement was ideal as a fall, and then you start this trajectory of up moves and then dipping and then up moves, and you can see what's happening now. Okay, previously you dipped your 20 MA, so you had a sustained harsh uptrend. You're now dipping to your 40. But there's a slight change in the market sentiment. Like I said, you've now got the Bank of Japan saying today, the Bank of Japan plans to reach a decision based on data up to the last minute, which is really annoying, really. I wish they could just say things earlier. And also the Bank of Japan said it's little need to end the negative rate in December. Okay, so they're not thinking of ending their negative rate policy immediately. But as you saw last week, as the week closed out, they changed their stance a lot and were talking about ending it, which is why it plummeted down here. Okay, that's why your US dollar dropped against your yen, because people are now saying, you know what, perhaps I would rather hold yens if I'm going to get a higher interest rate on it. So that's why you had that. Now, that sentiment outlook still persists. And what you're getting is classic within the way I like to trade. Okay, so I was short this morning. I still am holding short. And I'm doing it because you can see what you've got at this point is a harsh down move with minor retracements, okay, like this, and you've had a significant retracement now. So really, I would look to fall after this, at least to 145 plus. If I want to exit, I can lock in gains, I can do all sorts. But I'm short biased because I'm trading with that change in sentiment, and I'm trading with the overall market now. Okay, so there's two types of people really. If I go back to my weekly chart, you would have people who traded once all the way down, okay, like that. Or you would have had people like I was just describing, like myself, who would have done this, okay, because you can get more entries that way. So it's completely up to you. You can still swing trading like that, but it's very unlikely that, given the trajectory you saw previously and the style, or the manner in which the market rose, much like a staircase, when you fall back into that, you tend to get the same, which is why you get this bounce here. It comes straight to your key 40 MA. I called it long. You can go and look at my profile and all my streams for that. I said you want to get it long, okay, because it's going to have to bounce, or it's likely it'll bounce at some point like it did before. So you can kill off those longs. But the main underlying thing here is that if the Bank of Japan want to raise their rates, they've had negative rates for ages. That is why it has lost so much value against so many different currencies. Okay, it's been a double whammy with the Swiss yen, and it's exploded upwards on the Swiss yen. But, you know, the economic side really is what is ruling it long term. So, you know, I'm short biased here, and I'm doing it because I'm now, and like I said, it would probably coincide with historical price rejection somewhere else. But most recently, you can see you've got candle wicks here. So there has to be rejection at this point. There has to be somebody who's saying, you know what, I'm going to change my bias. You can see you're getting minor price rejection now, which serves somewhat as minor entry confirmation. You've not really had a harsh pull down. So if you do creep up slightly higher again, I wouldn't be entirely shocked. But for me, anything around here maintains a short bias. You're just getting a better short price within the overall fall in the event that something like this occurs. Okay, so if it goes higher than that, I will simply reshort again. The beauty of my method is that all the old shorts I had here were closed out for no loss, and the bounce I took profit on. So although I shorted it back in June, I'm now out for no loss and only profit because I've hedged. Okay, so that's why I don't use a stop loss, because I can still get rid of my former positions long term if I choose to. If you're just coming in, don't forget my free trainings underneath. I'm just going to talk about the Swiss yen as well, and I will brush on to other yen pairs. They're all much of the same thing. Again, on your Swiss yen, you've got this push up, very early resistance at this point, straight off the back of this big green candle. Within this change of market sentiment, you are also getting early price rejection. That's why it looks like that. And again, if you do find that you push slightly higher, because it's like an extra line of defense. Okay, if you do push slightly higher into there, it wouldn't shock me either. Many times that will happen, but nonetheless, you know, all around this area for me has a short basis, because you're pulling up, you're now getting a better improved price on the overall fall. That is the point in trading the market with oscillation. Okay, in other words, it's the point in selling there, buying there, selling here, buying there, selling there, buying there. Okay, the point of an oscillation is to allow you to get a better price within that overall fall. So if you're looking for a continued move like that, the only time you're going to get a preferential and be able to get a profit margin essentially is at that point. Okay, it's when you're looking short on that rise. So that is where I am with that. And it's the same across the board. I want to short my way down on your yen pairs. You can see what's happening as well is your key moving averages are creeping downwards. Okay, and anything around here, you bypassed your 20 is ideal for shorts. For me, similarly, if you go on to your pound yen, it's all very much the same. And you can see where that eclipse is. I called it short on many of my videos and streams. And it's come way, way down. And you're now seeing your re-push up. Okay, you can see that quite clearly. It's tackling this. Okay, if you do get up here, again, wouldn't shock me. But that is my overall short value zone. That is where I'm looking for value to the short side. In other words, if I want to get short within a larger down move long term, I'm going to want to do it on a push up. I never want to short these lows. If you went crazy and for some reason you shorted there, you're now getting punished for it. Okay, and that's why you never short lows. So be very, very careful with that. You know, you just don't want to be too vicious with it. In any case, you can likely short the market on the way down. So